Hey, it's Patrick Grosser with the 513 Flat Fee Real Estate Group at Fathom Realty. You may have heard about our full-service flat fee listings through a postcard in your mailbox recently. We'll talk more about those in just a second, but first we're going to look at the Cincinnati real estate market news for November of 2023 and compare that to November of 2022. First of all, new listings are down 2%, closings are down 20%, average sale price is up 7%, average days on market is at 21 days, total inventory right now is at 80 days, while active inventory is at 47 days. It is still a seller's market, but not as hot as it was earlier this year. So if you want to net the most money when you sell your home, you need a more sophisticated marketing approach, but you don't have to pay a 6% commission to get that because it comes standard with our full service flat fee listings. Visit our site at 513flatfee.com to learn more about our service and to find out how you can net the most money when you sell your home. Interest rates have been one of the hot topics here in the real estate news this year. It's no secret that interest rates are higher than they were the last couple years. They're certainly higher than they were earlier this year. But we have seen some relief in terms of interest rates declining over the last month or so. Depending on who you ask, the average is around 7 to 7.5% for a fixed rate 30-year loan. So it's not as bad as it was just a month or so ago. But of course, it is more expensive generally than compared to earlier this year or the last couple years. So affordability has been a challenge for buyers. It remains a challenge for buyers. But again, we are seeing interest rates declining. If that trend continues, we expect obviously for buyers to save money on interest, but they may actually have to pay more for the home because as we saw in the past few years when interest rates were very low, we saw huge spikes in home prices. And these higher home prices are a direct result of a boost in demand like we saw after the pandemic. A lot of people wanted to move after they were shut in their homes for about a year. They had a better idea of what they wanted. They wanted a bigger space or a different kind of space, or they wanted to relocate because maybe now they can work from home. They don't have to be as close to work. So there was a lot of reasons why there was a boom and there was higher home prices after the pandemic. But if rates decline right now, we do have a lot of pent-up demand of people that would like to move. They may be renters or they may be folks who own a home right now who have a 4% interest rate or something like that and don't want to pay 7 or 8%. So if we see that interest rate come down closer to what they have, or if we see that the price of a mortgage is going to be more similar to a rental payment that other renters are experiencing right now, we're going to see if it's more affordable, generally speaking, we're going to see more buyers coming to market. So for a short period of time, we're going to have some relief from that affordability crisis we have right now for buyers. But as a result of that increase in demand over the long term, maybe 6 to 12 months or longer, we should see a spike in home values, kind of like when we saw after the pandemic when interest rates were lower. Buyers were more willing and able to borrow more money because the interest rate was lower. So their overall payment was less than if it would be if it was a higher interest rate. And also it encourages when the interest rates are lower for more buyers to go ahead and go up and make that purchase rather than staying in their home, especially if they own a home right now, rather than staying with their lower interest rate and buying into a home with a much higher interest rate. If those rates are more similar, we're going to see a rush of demand from home buyers who own a home right now who are now willing to make that move, whether they're upsizing or downsizing. So on the one hand, hopefully interest rates continue to decline, and if they do, buyers will see some relief in how expensive it is to buy a home in terms of the interest they're paying on their loan. But on the other hand, we're going to see higher home prices eventually in response to that. So it's hard to say if it's going to be more affordable or less affordable or the same going forward than it is right now. That's why I don't recommend, if you're thinking about purchasing a home, to try to time the market based on the interest rates. I think it makes the most sense to take careful consideration of your housing needs, renting versus buying, or staying in your current home versus buying a new home. Really focusing on your housing needs and wants rather than what's going on in the market in terms of interest rates. If you're selling a home right now, you have to be aware of these factors. Obviously, you're on the flip side of that transaction. But if we do have lower interest rates going forward, we do expect more demand from buyers, which is going to translate to more showings and potentially more offers for you, which is, of course, good news for you. But if you're buying a home, you haven't bought that yet. If you buy after you sell, then of course you're going to have to deal with more competition from other buyers, but you may benefit there from lower interest rates as well. So again, I don't recommend, even if you're selling a home, to try to time the market either. Just focus on your housing needs and wants, the real motivation behind your move, rather than focusing on trying to time it perfectly with the interest rates, because there's always pros and cons to buying and selling or doing both in any market, regardless of whether you're focused on interest rates or the market in general. You really want to focus on your housing needs and just make a move when it's right for you personally. Another trend we've seen in the last few months is that we're not seeing as big a decline in new listings coming to market compared to last year as we saw earlier this year. We still see a single-digit percentage decline over the last 3 months compared to 2022, which means we still have fewer listings coming to market than we did last year, but not as big of a decline as we had in earlier months. Overall, year to date, we're down about 20%. New listings compared to 2022, but in the last few months it's been single digits. So it looks like the trend is more inventory coming to market, at least compared to what we had earlier this year, which is giving buyers more selection. It's making sellers have a little bit of a harder time to get theirs sold in a shorter period of time. That's also a factor we see here seasonally in the fall and the winter, where the market tends to slow down and it takes longer to sell a home. Buyers have more choices and sellers just have to have a little bit more time on the market. If you have any questions about buying a home, selling a home, or maybe doing both, given the current real estate market conditions, how to navigate that properly, feel free to reach out to us. The best way to do that and get in touch is to visit our website at 513flatfee.com. Click one of the links there to schedule a call so we can set aside some time dedicated to assessing your needs, and we can map out a game plan of how we can help you to achieve your real estate goals. I'm Patrick Rosser with the 513 Flat Fee Real Estate Group at Fathom Realty.